Presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Glenn in Massachusetts. Hey, Glenn, what's going on?
You know what is good for us is Tom O'Brien providing an unbiased source of information for us investors. You don't have an agenda. It's just to cut through everything and to give us the facts. I want to thank you.
No, I appreciate it, man.
And now, here's Tom O'Brien.
Hello, folks. Ken Shreve with you, filling in for the first hour of the Tom O'Brien Show today as Tom makes his way back from Denver, Colorado. Steve Rhodes will be handling hour number 2. But it's my pleasure to fill some big shoes today for hour number 1 of the Tom O'Brien Show. Let's take a look and see where we're at with the markets here. Some strength into the close. The Dow was up 45 points, almost 0.4% to 12,605. The NASDAQ up 0.3%. That's good for 8 points to 2823. And the S&P 500 up 0.2% to 1343. So, another good day for the market. Yesterday we saw nice gains after the release of the Fed minutes. The perception is that the interest rates probably aren't going to be going up for a while. That has caused some renewed weakness in the dollar. Dollar was down now for 4 straight sessions. So if that dollar continues to weaken, it's possible that you will continue to see strength in the market. I've had people asking me yesterday and today, so Ken, are you getting back in this market? You've been raising cash and taking some profits due to, recent signs of distribution, higher volume declines in the indices. And, the short answer is no. I'm encouraged by 3 straight gains for the NASDAQ, but the market just flat out still needs to prove itself more. There was no volume at all behind the gains during Wednesday's session. Looks like volume today, NASDAQ volume, is probably going to come in close to the 1.8, 1.9 billion shares that we saw yesterday. The same with the New York Stock Exchange. Looks like NYSE volume today is going to come in very close to Wednesday's levels. NASDAQ volume actually could even be a little bit lighter than Wednesday's levels, which were already light. So I'm still cautious on this market, but I'm not ruling out the possibility that we could continue to head higher. Tomorrow is options expiration, so we could see some volatility. Tomorrow we could see volume come into the market. Hey, and it's not out of the question that we see a nice percentage gain, and that frankly is what I'm looking for. For those of you that know me, I spent many years at Investors Business Daily, and one of the key things I learned when I'm using a top-down approach to picking stocks, which I use, is to identify new market uptrends, and the way you do that is by looking for some follow-through. The term follow-through is tossed around all around Wall Street, but you want to see a follow-through day at this point. We're working on 3 straight gains now for the NASDAQ. Follow-through days throughout market history tend to occur on day 4 or later of a rally attempt. So at this point, the earliest we could see one would be tomorrow. I don't know if it's going to happen, but a follow-through day would entail a big percentage gain in higher volume, typically 2%, 1.8, 2% or more. Volume must come in higher than the prior level. So we'd want to see volume on the follow-through day, if we were to get one tomorrow, of at least 2 billion shares on the NASDAQ. But it's still too early to say. We'll have to see how tomorrow plays out. We could also see one in the market next week, the following week. And, the important thing to remember about a follow-through day is it's just the market's way of saying that, my trend is ready to turn upward again. We've seen enough institutional selling in the market since early May. We've seen enough damage in leading stocks to be very cautious on this market. The yellow flags are out there. Now, it doesn't mean that we can't shift the stance and turn bullish if the market tells us to turn bullish. And the market will tell us to turn bullish if we see that follow-through day, whether it happens tomorrow, next week or the following week. The last powerful follow-through day that we saw in the market was last year in early September, specifically on September 1st, when the NASDAQ, it was up close to 3%. Volume picked up from the prior session, and that launched a nice 25-30% gain for the NASDAQ. It was a bona fide, real follow-through day where the market gave a lot of good buying opportunities for stocks coming out of consolidation phases. Remember, there was some pretty serious selling in the market ahead of that follow-through day, so it made that follow-through day all the more powerful. If we see one in the near term, remember, we've only come in about 3 or 4% off the high, so that's also important to recognize. We actually saw a follow-through day in the NASDAQ. It was a mild follow-through day. It really didn't have that big percentage gain that we'd like to see, but that was on March 24th earlier this year. NASDAQ was up 1.4%. Volume picked up from the prior session. It sparked a little bit of a rally for the NASDAQ. Some selling then came into the market. The NASDAQ rallied a little more, and to where we're at now. More higher volume declines in the market since early May. So if we do see one, you have to respect it, but follow-through days tend to be the most powerful and yield better, stronger rallies after a meaningful market decline. That's the bottom line. So if we see a follow-through day after a 3-4% pullback in the market, it could work, but I suspect it will launch perhaps a tradable rally rather than an extended, powerful price run. So just looking for an opportunity to profit in individual stocks. I'm still cautious on the market, still not ready. It was tempting, believe me. It was tempting to put some money to work yesterday. There were some other, nice movers today where it was tempting to put money, but, I take a lot of pride in the discipline I have, and again, the discipline I learned during many years of learning from some of the best over at IBD. And I know, discipline is important, and it's important to stay disciplined in a market environment like this. All right. Let's take a look at what gold did today. Gold for June delivery fell $3.40, 0.2% to $14.9240 an ounce. We'll take a quick look at the GLD. That's the ETF that tracks 1/10 the price of an ounce of gold bullion. You see, technically the GLD is still intact. I mean, there's been signs of institutional selling in the GLD, just like there has been in the broad market, but it is holding above a key support level at around 143, its 50-day moving average. Its 200-day moving average, a longer-term level of support, is all the way down around 133, 134. So gold is still intact technically. If it were to break below 143 with conviction, I think that would be problematic, and that could happen if we start to see the dollar strengthen, which isn't out of the question. Silver today down 17 cents, not too bad, 0.5% to $34.93 an ounce. Take a quick look at the SLV. That also tracks the price of silver, a popular ETF. Obviously, this has come under quite a bit more pressure than gold. The silver was much more of a speculative bubble than gold. Silver sold off sharply. The SLV hit a high of around $48. Again, the SLV was pretty much unchanged on the day, down a penny to 34.22, but firmly entrenched below its 50-day moving average now. Again, I talked about the UUP, which tracks the U.S. dollar index. It goes up when the dollar goes up. That fell below its 50-day moving average, and it looks like 4 losses in a row for the dollar. It looks like that 50-day moving average could prove to be some resistance for the dollar in the near term. Not a sure thing, but it could happen. So the SLV is now below its 50-day moving average. It's been there for a couple of weeks now anyway. So the 50-day moving average for the SLV is at 38. SLV is currently trading at 34. So that 50-day could turn into resistance as well. Crude oil for June delivery fell 1.7% to $98.44 a barrel. So quick look at the dollar. We mentioned that extended its losing streak to 4 sessions. Take a look at the UUP, which is the Power Shares U.S. Dollar Index bullish ETF. And 4 days in a row of losses. Once again, closed below its 50-day moving average today. It reclaimed the line last week when there was a lot of buying in the dollar. The commodities were selling off. But again, after the release of the Fed minutes yesterday, the perception is this dollar could remain weak with this accommodative policy. It doesn't appear like the Fed is in any rush to raise short-term interest rates. Big news today, the LinkedIn IPO. Boy, I mean, I'm a contributor at the Street and realmoney.com, and boy, all the talk today among colleagues was this was just 1999 all over again, when all the internet bubble was forming, and all these super speculative internet stocks with no earnings were just going through the roof. And here you have LinkedIn. I mean, the offering price was raised to $42 to $45 a share. Initially, it was supposed to be $32 to $35, and the stock opened at $81 earlier today. It eventually closed at $94.25, up, 16% or so. It hit an intraday high of, $122.70, I think. So a big move in LinkedIn. This is a professional networking site. It generates a lot of revenue. I mean, the company did, I think, $300 million in revenue last year. It's growing quickly on a revenue standpoint, but it's still not profitable. It has nearly 3,900 companies that use its recruiting service. The company reached 100 million members in March. So one of these, these social networking sites, no one doubts the traffic and the audience that they have. But how do they become consistently profitable? That's the big question for not only LinkedIn, but other social networking sites like Facebook, which has 600 million users, Groupon, the coupon service, and also Zynga, which makes online games. Facebook, Groupon, and Zynga will also be coming public at some point. You'd have to think that with the success of the LinkedIn IPO, all three companies, Facebook, Groupon, and Zynga, might accelerate their plans to come public sooner than they expected. Economic data earlier today, weekly jobless claims down 29,000 to 409,000. 4-week moving average crept up a little bit, up 1,250 to 439,000. Existing home sales for April. I mean, the housing data just continued to disappoint. We had housing starts earlier this week that were dismal. The National Association of Realtors said earlier today that sales fell to an annual rate of 5.05 million units. That's down from 5.09 million in March. Economists were looking for existing home sales to actually increase to 5.23 million units. In other news, Thermo Fisher Scientific rallied 4% to 65.23 after the company said it plans to buy Swedish firm Fadia for $3.5 billion in cash. Fadia makes blood testing systems for allergy and autoimmune disorders. When we come back, folks, we'll take a look at some earnings reports, some gainers, some decliners. We'll be right back.